Have you ever wondered what's really happening in the U.S. bond market right now? Some analysts believe the traditional safety nets for the dollar may be under pressure, and the strategies being deployed to stabilize the system are unlike anything we've seen before. Today, we're diving into the complex world of bonds, stable coins, and international finance, and exploring scenarios that could shape the economy for decades to come. Let's start with the U.S. bond market. Even with a new Federal Reserve chair who's considered more hawkish, that doesn't automatically guarantee stability. There are growing concerns that U.S. debt dynamics and global demand for treasuries could create headwinds. For instance, the administration has introduced programs aimed at incentivizing long-term savings, like child accounts that could eventually be invested in broad-based index funds. Some analysts suggest these programs may indirectly encourage future generations to remain invested in U.S. equities. The goal appears to be to maintain market demand, but whether this can fully stabilize the system is still uncertain. Back in July, the so-called Genius Act was introduced to expand the stablecoin market, cryptocurrencies designed to be backed by the dollar. One proposed outcome is that such mechanisms could increase demand for U.S. Treasuries, providing another potential layer of support for the dollar. Some analysts highlight that the stablecoin market could grow significantly by 2030, which might create a new type of private sector buyer for U.S. government debt. However, major stablecoin issuers currently hold diversified reserves, not exclusively treasuries, because yields are relatively low and operational needs require other assets like corporate bonds, Bitcoin, or gold. Meanwhile, foreign demand for U.S. debt is another factor to watch. In 2025, about a third of federal debt is held by foreign investors, a sharp increase from just 5% in the 1970s. If foreign buyers reduce their holdings, domestic investors may need to absorb more supply, potentially influencing yields. Some experts caution that this could create challenging scenarios for the Treasury and the broader market, though outcomes are far from certain. It's important to consider alternative viewpoints. Supporters of these programs argue that innovative financial tools like stable coins could help maintain market stability. Others point out that the U.S. economy is still large and resilient, and domestic institutions have significant capacity to invest in government debt. There's also the global perspective. Countries like China and Canada are increasingly exploring alternatives to the dollar for trade and lending. For example, Canada has renewed a currency swap agreement with China, allowing trade to be settled in local currencies. Some analysts suggest that these moves could gradually reduce the dominance of the dollar in international trade, but it's a gradual process, not an immediate collapse. So, what could potentially happen in the coming years? One possible outcome is that demand for U.S. debt could face intermittent pressure, which might lead to higher yields and increased scrutiny of government borrowing. Alternatively, innovative programs and private sector demand could provide partial stabilization, but not necessarily fully mitigate underlying structural issues like deficit spending. Critics argue that relying on stable coins as a structural buyer is uncertain, given the volatility in the crypto market and the diversified nature of reserves. Meanwhile, ongoing global trade shifts may slowly change the landscape for the dollar, creating both challenges and opportunities for international finance. Here's something to think about. Could innovative financial tools like stable coins realistically support U.S. debt markets in the long term? And how might growing trade with China and alternative currency agreements influence the role of the dollar in global markets? I want to hear your thoughts. Drop a comment below with your take on the U.S. bond market and the potential impact of stable coins. If you enjoyed this breakdown, smash that like button and subscribe so we can continue exploring these complex financial stories together.